What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD where we had these two setups. One unfortunately resulted in a loss, however the second one made up for that loss, bagging us a 4-hour profit. This is a really good example of how we can switch bias after taking a loss and identifying a correct draw on liquidity, make back that loss and end the session with some profit. Let's jump into the analysis now and see how this session played out. So here we are as always on our 15-minute chart, looking for our levels of untapped liquidity and inefficiencies in the market. So we are using the session liquidity tracker, showing us these extended green lines for untapped session liquidity. This is called the session liquidity tracker indicator. When liquidity is swept, those lines turn to red, so we can see we've taken that level of liquidity. And then we've got a fair value gap indicator here, showing us any imbalances in the market on the 15-minute time frame currently. We can see that we've got this large bullish fair value gap here, which is currently supporting price, and then a couple of bearish fair value gaps highlighted in the red. Also, as part of the session liquidity tracker plugin, we are shown new week opening gaps. So these are these extended orange boxes. So you can see we're currently just trading above one new week opening gap from earlier on in the month. And then we've got larger new week opening gaps prior to this below us. Yesterday was quite a strong bullish move. So obviously Friday we had a good pullback consolidation. Yesterday continued that move. So a good strong bullish move again yesterday, Monday the 30th of October. So the first thing that I want to note is where my premium and discount is of this large bullish range that we had yesterday. Ideally, I'd like to be looking for longs in a discount and then shorts obviously in a premium of this range. We can see that we do have relative equal lows in the Asia session. So this is two relative equal lows, untapped liquidity for the Asia low here. And we've got this large 15-minute fair value gap into a discount. Just beneath this. So we're just going to highlight this 15-minute fair value gap here. This fair value gap is within a bullish order block as well. So we've got some confluence here for a potential reversal if we do pull back, and that would also take us into a discount of this range, which would be nice. Smart money will generally take long positions and buy in a discount and look to sell when they get into a premium. We're currently hovering around in a premium, but we're engineering liquidity. You see from these relative equal lows, actually we have this wick low as well from the New York AM session. So I'm going to highlight this as buy side liquidity. Really nice level. Sell side liquidity. Really nice level. Good strong draw on liquidity in my opinion. Above us we've obviously got untapped Asia high. And then we've got New York PM and previous day's high as well to take a run at. Ideally I would like a sweep of the lows into a discount, looking to then continue the move higher. We know statistically that Monday or Tuesday are likely to put the high or the low of the week in. Therefore, I would be expecting the high of the week potentially to be put in today. And so a dig down into this level for a long position would be a really nice trade. We've got some smaller inefficiencies on the 15-minute time frame here. So bearish fair value gaps coming down. Obviously nothing as significant as the large displacement that we had on the bullish side of things. But again, just something to be aware of. We'll take a fib from the high of yesterday to the current relative equal lows. So what we could potentially get is a pullback into this range to then come and sweep these lows. So pull back into the Asia range and then sweep these lows, coming to fill in this inefficiency lower down. So that is another option I want to be aware of, premium and discount of the current pullback range. So our session is going to be starting at 2 AM New York time, so we're currently at 1:45. TradingView is showing multiple red news folders within our session. However, Forex Factory, which is what I go on, is not showing any red news. These folders are actually yellow folders on Forex Factory, so I'm tending to lean more towards trusting Forex Factory as opposed to the presets that TradingView are putting out there. So essentially I'm ignoring all of these. No red news in my trading window. So if we're looking for a pullback short position, if we're going to pull back into this range and then look for a short to come and sweep these equal lows, we need to be looking at our levels of liquidity. So we've got a swing low, a swing high here. which would offer some buy side and a swing high here. I will say that neither of these are relative equal highs, so they're not massive draws on liquidity. Let's take a look on the 1 hour. So on the 1 hour time frame, as far as liquidity sweeps go, we are really, our last swing high is above the Asia high on the 1 hour time frame. We've got some buy side obviously, which is previous day's high. Let's just mark this, an hourly swing high there. Buy side liquidity, New York PM session high as well. So if we're looking at this, the two levels of buy side that I've highlighted on the 15-minute time frame are probably not that significant in all fairness. I'm going to drop onto the 5-minute chart now, and we're going to start scrolling through our session and see how price progresses. So we've got nice draw on liquidity as far as these relative equal lows go, and then obviously we've been in bullish price action from Friday and Monday, so potentially look for a sweep of the lows and then take these highs. Okay, so we've not taken the lows. We're into our trading window now, London, just starting at 2 AM. Strong move higher, so we've taken one level of buy side liquidity and closed through it. We'll drop to the 1 minute now. This has taken us into a discount, into a premium of this range. So we've swept this liquidity, so I'm just dropping onto the 1 minute to monitor because we have just tapped discount, which means that we could see now some displacement coming back. The sweep of liquidity, there's 230, so we want to be looking really at 245, see if there's anything around 245 for an entry. Nothing at the moment, just continuing higher above that level of buy side. So our next point of interest is here, which is the 618. This is optimal trade entry of this pullback range. See if we can maybe sweep that liquidity into optimal trade entry for a short position. Obviously, we're coming now into 3 AM, so silver bullet hour is about to start. So we've got a big drive up towards that liquidity. Let's see if we can sweep it now, coming into the silver bullet hour. So we've swept that liquidity into the optimal trade entry. We've got these large candles here. These are now currently a bullish order block. So down closed candles in a bullish move should support price. So these are now a bullish order block. Obviously we've got bullish fair value gap here as well. So as always, once we've swept liquidity, if we're looking for a reversal, we're looking for PD arrays to start to fail, which means we can potentially first see this bullish fair value gap fail, which would turn into an inversion fair value gap. If we see this order block fail, then this would be our breaker block, which would be nice. So we've had a sweep of liquidity into the silver bullet hour, so the open of a new 15-minute candle at 3 AM. Going down, so we're respecting that fair value gap at the moment. We've closed through, so there is our inversion fair value gap. The inversion fair value gap has also been covered by a bullish fair value gap. So now, where these two overlap is our balanced price range. So this is a very inefficient area of price delivery. So when price comes back to tap this, we can generally expect a strong reaction. The order block has failed. We've closed through the order block, so this is now a breaker block as well. The time is 3:10. So as you know from my previous videos, I like to be entered at the start of 15-minute candles. So we can see coming into 3, we've swept a high and now we're pulling aggressively lower. We've got this nice trend line liquidity here. Obviously very inefficient price delivery at the start of the session. So this all needs rebalancing, so we could get a really nice fall through this level coming to sweep out our lows. So this for me is setting up to be a really nice entry. I would like to get my trigger anywhere between 312 to kind of 318 in that kind of 6-minute window. So we're coming close now. 310, oh, 311. So I'm going to drop a short position here now at the bottom of this breaker block. Stop loss above the high. We've got a fair value gap, we've got a balanced price range, we've got an order block, and we've got a breaker block all as resistance. We have swept a swing high in the Asia session into, well, just below optimal trade entry. And so this is enough reasons for me to go short, and we've got massive inefficiencies here. So I would expect price to quickly fall through this, going for our relative equal lows as a draw on liquidity. So my target is going to be taking out these relative equal lows for a really nice 3.4R. Right, let's just zoom in. We'll pull in lower. We have taken that low there. So it would have been nicer if we didn't take this low. In fact, it's just relative equal lows at the moment. Now we've taken the low. So 314. So we're coming into the new 15-minute candle now. We've swept that low, which ideally I would have preferred not to have swept that low, because that would have been a good draw on liquidity. We've only just pinned through it. We're respecting this bullish fair value gap at the moment. Pull back off this bullish fair value gap. So here's the concern. This trade, as we know from the opening introduction, is going to turn out to be a loss. So when analysing this, what can we see? Well, first of all, it's counter trend. We're in a very bullish price move. We have swept liquidity, but it's only minor liquidity. So it was just a minor 1-minute swing high. It wasn't equal highs, so we didn't have relative equal highs. The Asia high was relative equal highs, so that was maybe a more prominent level of liquidity to sweep. And we're rejecting off a rather large 1-minute fair value gap. Now the entry is perfect, 316, so this is exactly what I'd want to see. The entry's at 316, big inefficiencies below, so I don't think there's much wrong with this trade. We'll come into tab the balance. No, we've not tagged the balance price range, we're rejecting away. There's the BPRs just being tagged here. So we're in a little bit of consolidation. 315, 324, so we've got 330. So while I was in this trade, I was expecting at 330 to see some bearish move come in. We've had displacement coming into the silver bullet hour. And my draw on liquidity is relative equal lows below us. So I wasn't worried at this point in the trade. I was thinking that we would just respect this area, just having a little bit of consolidation before a continuation lower. Unfortunately, we closed through the BPR, so that was the first warning sign. When I saw that we closed through the BPR, I did get a little bit worried. Thought, oh dear, this should be repelling price. We've balanced this range now, come lower. This candle is closing back over the BPR, so we will now want to see some displacement. We've filled in all inefficiencies on this price leg, so there's no reason for price to go higher anymore. So I really wanted to see it accelerate lower now, coming into the open of the 330 candle. Sadly, that big engulfment takes us out of the trade. So that was a loss, unfortunately. I think that the setup, unicorn entry, was valid. We did have a sweep of minor liquidity here, massive inefficiencies, and I believe that this draw on liquidity was a strong draw on liquidity. So I think the analysis was solid. This was just one of those mornings where it didn't go in our favour. However, you don't get stuck on these things. What we can see then, we know we're in the silver bullet hour, which means price is being drawn to some level of liquidity. This green line here is showing us our Asia high, relative equal highs, untapped liquidity. We've swept some liquidity here, so we've had a small sweep, and we are now displacing bullishly towards this. So my thoughts are, okay, we are definitely going for the Asia high. Let's just remove this analysis, and I'll show you the theory behind the long position. So we have now identified that the draw on liquidity I initially thought, which was these relative equal lows here, is not correct. We do have relative equal highs as our draw on liquidity. So we can switch bias. We've swept a low, last two up close candles. So we're looking for the up close candle that lead to the swing high and then a sweep of liquidity. This here is a breaker block. So these two up closed candles, the highest up closed candle before the swing high leads to a sweep of liquidity. This should have been respected as an order block. So these two here, we shouldn't have traded through these. Price has traded through those two candles. Therefore, these flip to a breaker block. Time-wise, we're at 3:32. So we've come into the new half-hour candle. We have literally displaced. So we've got a fair value gap inside a breaker block. You can see that the bullish candles are significantly larger than the bearish candles around them. So we're engulfing bearish candles with left displacement going up, reaching towards this untapped level of liquidity. So my theory here was we are definitely going to try and sweep that Asia high. I will take a long position. Stop loss just below this low, so it's just below the breaker block. It's a 3.3 pip stop loss. We are reaching for the Asia liquidity, which is just over 1-to-1, so that's a point where I can go break even. The trade would be risk-free and essentially getting in line with a continuation to take out New York PM session high and previous day's high. So the thesis here is that we're not getting the pullback I was expecting. We are displacing now towards Asia high, which means I can get risk-free. This is quite a low-risk trade. It's going to be easy to get to risk-free because I think we're definitely going to take out Asia high. So we're taking entry on this breaker block that we have displaced through a continuation trade up to Asia high, and then we can hold some runners aiming to take out previous day's high. And this is all happening at the start of the 8:30 candle. Again, keeping in mind that we are in silver bullet hour also, which, as we know from ICT teachings, silver bullet hour means we are going to be reaching for a level of liquidity. So if we scroll forward, we can see we are tagged in at 3:34. So just outside, as I mentioned, I'm looking for entries around 3 minutes either side of the open of a 15-minute candle. This is 4 minutes, so it's very close. Taps it perfectly and then accelerates towards the Asia high. So this is 50% of the trade taken off here. Leave the stop loss where it is. I'm closing 50% of the trade, so we're now risk-free. And I am holding the rest now, expecting previous day's high to get taken out. And we can see price continues aggressively now, so this is the beauty of the silver bullets. If you get your draw on liquidity correct, quickly runs through that high, bagging a really nice 4R. So it makes up for the loss that we took here. We get paid back. We lost 1R on this trade, but we made back 4. So essentially we are net 3 up. And this is how you can use the confluence of time, knowing that we're in the silver bullet hour, and the fact that we were so close, displacing towards untapped levels of session liquidity. We could quickly identify our initial draw on liquidity, which we thought were the relative equal lows, was the wrong draw on liquidity. Clearly we were reaching for the untapped Asia highs, so we can switch our bias using the same entry model, so the same breaker block, fair value gap, unicorn entry model, to get in line with price action for a continuation trade, sweeping these highs. And ultimately we make back the loss that we'd taken, sweep previous day's high. I'm out of the trade now. Price does continue higher, reaching for further liquidity, which must have been from well early on in the month. But I'm estimating that this is Tuesday, putting in the high of the week. So there we go. That's the 2 trades from this morning's session, and a really good lesson on how to flip your bias using the concepts taught from the silver bullet hour, still using our entry model to get in line with price action, and not getting too worried about taking a loss, because you can soon flip and recover that back again with additional profit by getting a continuation on the move. There we have it. There's the 2 trades from this morning's London session. 1 loss, 1 really nice 4R trade, making back that loss. Hope you found the video useful. If you did, please leave it a thumbs up. If you got any questions, leave them down in the comments section below. And if you're enjoying the content and want to see more analysis like this one, then consider subscribing. I'm dropping videos like this every single day. It'd be great to have you on board, and I'll see you again in the next video.